Hi everyone, welcome to my channel Green World Investor. I hope you are doing good. The topic for today's discussion is on Quant Fund. We are covering Quantamental Fund in this video. So Quantamental Fund, so far so good, but the proof of the pudding lies in the eating. So in this video, we will take a look at what quant mutual funds are, how do they operate, how they are different from the other sectoral funds existing in the Indian market today, the returns of this fund, the allocation, the features, advantages, the disadvantages, and whether it makes sense for us as investors to actually invest some portion in the in such funds. So Quantamental Fund, let's have a look at this video. But before beginning the video, let me just say I'm not a SEBI registered investment advisor. For all your investment purposes need, you should meet an RIA. This video is made only for the purpose of education. So Quantamental Fund is very different from the other sectoral funds that we have seen so far. If interested, you can refer to the link of the sectoral funds that we have covered so far. The new viewers can have a look. The link is flashing above. So Quantamental Fund is a thematic fund from the house of Quant Mutual Funds, and this fund came into being in the last 2 years, and it is very different. It does not have a very focused sectoral allocation. It is not a sector theme based fund that we have covered so far. So it uses a combination of factor based macro based scoring method, also involves some bit of human judgment in it. So it is neither a pure quant mutual fund, nor is it a pure human based approach mutual fund. It is actually somewhere, it lies actually somewhere in the middle, and we will see how it works. So main investment objective of this fund is to give us higher returns than the underlying benchmark indices. But remember, with higher returns comes higher risk. So let us take a look at the different features of the Quantamental Fund. So like other mutual funds from the house of Quants, the expense ratio of this fund is around 0.56% for a direct plan. So this, if you look at this 0.56%, it's very cheap when you compare it with the other sectoral funds that we have seen so far, whose expense ratio is generally in the range of 1%. But for this fund, and also for other quant mutual funds, expense ratios are generally lower. Also, this fund has no entry or exit load involved, which makes it further attractive for the purpose of investments by investors. So yes, the charges involved are very low when we compare them to its other peers that are trading in the market currently. Now looking at the performance of the Quantamental Fund, so the fund has given around 30% returns in the past, which is higher than 20%, which is 20% higher than the benchmark Nifty 500. And also if we look at the last 2 years performance, it is around 23% per annum. So the returns are pretty decent if you have a look now. But let us see whether it will fare well in the future or not. Why? Because it is a new kind of concept in the Indian market. We haven't seen very quant-based funds so far. The performance, this fund is also pretty new with its existence of just 2 years. So let's see how it will fare well in the future, because a lot of the performance of the fund depends on the judgment of the fund manager. Since it is not a pure play sectoral fund, it depends on what he chooses. His stock picking or sector picking skills will be at a test. So the performance of the fund will be really based on what the judgment of the fund manager is. Now let us take a look at the allocation. So the allocation of this fund is heavily weighted towards the large cap, with more than 50% allocation in the large cap sector and very little towards the mid or the small cap sector. Now if we look at the top sectoral allocation here, we have the construction and energy occupying the number 1 and number 2 position in this fund, followed by finance and technology, which makes sense because finance and technologies have been performing quite well in the Indian market. So the sectoral allocation of this fund involves construction, energy, finance and technology. All of these sectors have been performing historical well in the Indian context. The fund has overall 26 stocks under its overall holdings, which is lower than the average holdings of the other funds involved. But it also shows that this is how the fund wants to differentiate itself from the other mutual funds, which are generally a copy of the index. Now, one of the things of this fund is the high portfolio churn of around 236%. Now, mind you, portfolio churn, generally, if we look at other funds, it's high portfolio churn could be a warning, which means that the manager is moving regularly in and out. Stocks that are there in the fund are regularly being changed, they are being churned for a new stock or a new sector. But in this case, the portfolio churn is quite high, of around more than 200%, which means that there is a constant in and out, exit and entry of stocks or sectors in this fund. But if you look at the overall the theme of this fund. It is a quant based fund which strives to generate higher returns for its investors. And so in that context, if you look at that, it is quite natural that the churn will be high, because the manager will need to quickly move in and out the stocks that are not performing well, or want to include more better stocks whose returns are expected to be better in the near future or in the long run. So for that, the churn of this kind of funds is generally will be higher than the other normal mutual funds that are operating, especially in the Indian context. Now let us take a look at the top holdings of this quantum mental fund. So if we take a top most holdings in this funds are the regular candidates, like in the form of SBI, Reliance, HDFC, L&T. However, this fund also involves an interesting mix of some of the stocks in its top 10, like BKG and DLF, which these stocks, if you look at them, they have a good potential of growth in the real estate as well as the food sectors in India. They are doing quite well currently in the Indian market. It also has a mix of infra mid-cap stocks like Zensar, and the fund also has a good mix of high quality stocks as well as some new smaller high potential companies like Sula and Usha Martin, which shows that the fund is doing something, some good research, because all these stocks are expected to do better. They are showing a better face of the Indian markets, and they are expected to do better in the near or in the long term. So in closing, I would like to say that though the returns in the stocks are good, it has a lot of positives in the form of low expense ratios, or better allocation, better stocks to look at, not the general allocation or the general holdings that we see in a normal mutual fund. But if as an investor today I want to invest in quantum mental fund, I am not sure what I am getting into, what are the because it does not give me a clear picture of any sector that I'm getting into or a stock, and a lot of its performance is also judgmental based on how the fund performs on the basis of the judgment of the manager and its team. So we are not very clear, and hence it will involve a lot of risk also in this fund, because in the run to get higher returns, there will be a lot of churning involved, and we do not know what the overall risks impact will be. But it is expected the volatility and the risk of this fund will be very high, as it strives to give us higher returns. But generally, when we are entering into a mutual fund, we are looking for, we know that we are getting into this sector, it is expected to perform like this in the future. We know the news related to any particular sector, what is going to happen in our country in that front, what is currently happening in that front. But for this kind of quant mutual fund, we are not very sure, because we do not know which way the fund is directed into, what are the top holdings. If today the top holdings are in construction or energy, but we do not know if tomorrow it can change to some other class of stocks. So I'm not sure as an investor what I'm getting into. So I would suggest that if you want to invest in this fund, just do not go dive in head first. You can start with a small allocation if you want, but because of lack of clarity, I'm not very sure if I would give you an advice to get into this fund. However, if you look at the returns were pretty good, and also the fund manager is doing some research, because it is regular. It has increased its allocation to better performing sectors like capital goods and financials recently. So this was all from my side. I hope you like the video. If you like the video, please click on the like button. Also click on the subscribe button. Also share it with others. I'm new to this platform, so please show me some love. For subscribing, you can just click on the green globe that is flashing on your screen. And I really hope to see you again. Bye, and have a nice day.